Join me as I dive into the unpredictable world of Tesla stock and take on the challenge of predicting if it will crash in 2025. Tesla is one of the most talked about companies in the stock market, and for good reason. With its innovative electric vehicles, autopilot technology, and ambitious goals for sustainable energy, Tesla has disrupted the entire automotive industry. But with great innovation comes great risk, and many investors are wondering if Tesla's stock is headed for a crash in 2025. As we explore this topic, it's essential to understand the significance of Tesla's stock in the market. With a market capitalization of over $1 trillion, Tesla is one of the largest and most valuable companies in the world. Its stock performance has a significant impact on the overall market, making it a critical topic to discuss. In recent years, Tesla's stock has experienced incredible growth, driven by its increasing sales, expanding product lineup, and improving profitability. However, this growth has also led to increased scrutiny, and many investors are questioning whether the company's valuation is sustainable. So, what are the potential risks that could lead to a market crash for Tesla's stock? In the coming sections, we'll dive into the challenges that Tesla faces, its business model, and key insights that could impact its stock performance in 2025. Competition is one of the most significant risks facing Tesla. With traditional automakers like Volkswagen, Ford, and General Motors investing heavily in electric vehicles, Tesla's market share is under threat. Additionally, new entrants like Rivian, Fisker, and Lucid Motors are also vying for a piece of the EV market. Another challenge Tesla faces is production issues. The company has struggled with scaling its production to meet growing demand, leading to delays and production bottlenecks. Furthermore, the global semiconductor shortage has also impacted Tesla's production, leading to concerns about its ability to meet its delivery targets. Economic factors also play a crucial role in Tesla's stock performance. With rising interest rates, global economic uncertainty, and the ongoing pandemic, investors are becoming increasingly cautious about investing in high-growth stocks like Tesla. Additionally, the company's high valuation multiples make it vulnerable to even minor declines in revenue or profitability. Furthermore, Tesla's business model is highly dependent on government incentives and regulations, which can be unpredictable and prone to changes. The company's autopilot technology is also facing increased scrutiny, with regulators examining its safety and capabilities. Tesla's reliance on a few key suppliers also poses a risk to its production and profitability. For instance, the company's relationship with Panasonic, its battery supplier, has been subject to negotiations and disputes, which could impact Tesla's production and costs. In addition, Tesla's international expansion plans are also facing challenges, particularly in countries like China, where the company is facing intense competition and regulatory hurdles. Tesla's CEO, Elon Musk, is also a significant factor in the company's stock performance. Musk's tweets and public statements have a significant impact on Tesla's stock price, and his leadership style has been subject to controversy and scrutiny. Despite these challenges, Tesla's business model has several strengths that could help it weather any potential storms. The company's vertical integration, for instance, allows it to control its production costs and supply chain, making it more efficient than traditional automakers. Tesla's brand loyalty is also unparalleled, with customers often willing to wait months or even years for their vehicles. This loyalty is a significant competitive advantage, allowing Tesla to maintain its pricing power and customer base. The company's commitment to sustainable energy is also driving innovation and growth, with its solar panels, energy storage products, and charging network all contributing to its revenue and profitability. As we examine the key insights that could impact Tesla's stock performance in 2025, it's essential to consider the company's financials. Tesla's revenue and profitability have been growing rapidly, but the company still faces significant challenges in terms of scaling its production and reducing its costs. One key metric to watch is Tesla's gross margin, which has been declining in recent quarters. If the company can improve its gross margin, it could lead to significant upside in its stock price. Another critical factor is Tesla's vehicle deliveries, which have been growing rapidly in recent years. However, the company faces significant competition in the EV market, which could impact its ability to maintain its delivery growth. Tesla's autonomous driving technology is also a significant upside catalyst, with the company's full self-driving technology expected to generate significant revenue and profitability in the coming years. As we recap the major points discussed, it's clear that Tesla's stock is facing significant challenges and opportunities in 2025. While competition, production issues, and economic factors pose risks to the company's stock performance, its business model, brand loyalty, and commitment to sustainable energy provide a strong foundation for growth. In conclusion, predicting Tesla's stock performance in 2025 is a complex task, but by examining the key challenges and opportunities, we can gain a deeper understanding of the company's potential. What do you think? Will Tesla's stock crash in 2025? Share your opinions in the comments below, and if you're new here, consider subscribing for more content on Tesla, stocks, and the market.